What's up everybody, Nate here. So a little over a week and a half ago, I made a video on the Inflation Reduction Act. Now the Inflation Reduction Act is supposed to, well, reduce inflation in our economy, which is spiraling out of control right now. In July of 2022, it hit an over 40-year high of around 8.5%. That is way higher than we have seen in over 40 years. So the federal government and Congress decided that they needed to step in order to try to bring inflation down. But when I made that video, well, it wasn't official and it was just a bill at that time. But recently, President Joe Biden signed it into law. So today I want to give you an update on how it's changed since then. I want to go over how much it costs, what's actually in the bill, and of course, if it's actually going to reduce inflation. Now, the first thing we need to go over is how much does this bill actually cost? And the entire price tag for this Inflation Reduction Act is around $750 billion. The federal government is hoping to spend a whole bunch of money in order to improve infrastructure and the efficiencies of a lot of different programs in the United States that will hopefully make it so a lot of Americans don't spend as much money in the future, reducing inflation. But if you watch this channel a lot, you're probably thinking right now, well, the government has to print a lot of this money. The federal government doesn't really get a lot of money on its own, so it has to collect taxes or it can print money, and that alone can cause inflation to actually rise. And you would definitely be right. And we've seen this over the last 2 years. The federal government and the Federal Reserve have printed a ton of money. Like at the start of 2020, we had around $3 trillion in circulation, and today we have over 20 trillion. So there is a lot of money out there, and when there is a lot of money in circulation, people tend to spend it. And as people spend that money, well, then businesses now have to raise prices because they don't have as much goods and services as they need to support the entire economy. So they start to raise their prices, and they have extra costs associated with that because now they have more workers, they have more factories, and all of these prices essentially go up. I mean, that's really the only way for them to make money. They have to raise their prices or they have to sell more things. And right now in this economy, they're not really able to sell a whole bunch of more things. So that is why you have a lot of money and why a lot of money creates a lot of inflation. Now, the argument right now against this bill is that you're printing a whole lot of money, and all of this money is then going to be trickled down to all of these companies and businesses that are going to be helping out with all of the things that the bill needs. So all of the people associated with those companies are now going to be getting paid more. These companies have to hire more people, and that means in the short term, inflation is going to go up. And that is definitely a possibility. However, I don't think that's going to have a massive effect on inflation in 2022. We might see some slight spiking in certain areas, but overall, inflation isn't going to really be hurt by that. The bill is supposed to bring in around $700 billion in additional revenue for the United States federal government, something that it needs considering it has printed a whole lot of money over the last 2 years or so. A lot of bills have been passed, like the infrastructure program and now this new Inflation Reduction Act, and of course all of the stimulus and all of the money that the United States government just needs to pay off all of its debt, but it is not bringing in nearly enough in tax revenue. And that brings me to what is actually in this bill. So I'll break this down into 3 major categories. We have the climate side, we have the health side, and then we have the taxes side. This is the single largest investment from the federal government for climate change. So around $360 billion of all of that money in the Inflation Reduction Act is going towards climate change. A lot of it is supposed to bring a lot of clean energy into the United States, investing in solar power, investing in wind power, and getting a lot less of our reliance off of gas for our vehicles. There's also a lot of clean energy taxes, and homeowners, at least current homeowners, can gather a lot of tax credits by installing solar panels on their house. And they can get help from the federal government in order to do that. That way they can save money by using a lot less electricity that is created from fossil fuels and natural gas. Instead, they'll be using solar energy. And like I said, this is something that can cause inflation to potentially go up in the short term because a lot of these things, well, we don't have the infrastructure yet to produce them, but also it is a hefty investment up front for a lot of Americans. Now, in the future, this may work out, but right now, it's going to be very expensive for Americans to install these things. Plus, not every single American can do it, and not every single American is going to do it. So we're hoping that that reduced costs in the future, but we just don't know yet. And like I said, this is massive for electric vehicles because now electric vehicle owners are going to get a tax credit every single year, and $3 billion of all of this money is being directly invested into USPS. They are now going to be able to create electric vehicles to send all our packages throughout the United States. The other part of this is healthcare. So Medicare can now start to negotiate prices for certain drugs all throughout the United States. The big argument that I've been seeing from people though is that once you start negotiating prices, well, these drug companies are just going to stop working with Medicare, but that might not be the case. This would essentially keep drug prices fair for a lot of Americans, and if drug prices do go higher than what the inflation rate is because of, well, production costs and other things, they would have to issue a rebate to a lot of Medicare users. And negotiations are probably going to shrink, but it's not because of the Inflation Reduction Act. A lot of these drugs are kind of becoming compounded with a lot of other drugs in the United States, so they're kind of getting smaller anyway because there are just less drugs out there. More than likely, all of the drugs that are currently on Medicare and the major ones that most Americans are using are still going to remain. They're just most likely going to be at a lower cost. At least we hope so, as a lot of Americans may end up seeing their drug costs actually rise as these drug companies try to find profit after cutting costs for Medicare. And the same could be said for the taxes side of the Inflation Reduction Act, because this entire Inflation Reduction Act actually poses a 15% minimum corporate tax for all businesses that make over $1 billion every single year. Now, all these businesses are going to have to pay that tax, but they may end up putting that additional cost on the consumers. And there's really nothing stopping them from doing that. So in order to recoup some of their costs for paying that $1 billion, they're just going to up the prices for their products. Granted, some of them might not do this, but others may end up doing this more, which would mean inflation just goes up in the short term. The other thing this bill does on the tax side is actually increase the amount of IRS workers by 87,000 over the next 10 years or so. The IRS has not had a lot of workers for a very long time, and they have a severe backlog in tax returns from 2019, 2020, and 2021. So that means if the United States federal government can't go through these tax returns, then they're not able to get the tax revenue for any of it, and they desperately need that as they continue to pass more bills and spend more money. It also gives these IRS workers a little bit more leeway when tracking down people who are illegally evading taxes. And we're likely to continue to see that as the United States government passes more bills. We're probably going to see even more bills that address the tax code as they try to figure out more creative ways in order to tax people. I've said this before, but the United States government is nonprofit, meaning that it has no real ways of collecting money other than from taxes and from printing money. And printing money just causes more inflation, so they try to avoid that, but they also try to get as much money as they can from taxes so they can pay for all of their bills. How to answer the question of this video: will the Inflation Reduction Act actually reduce inflation in the United States? And the answer is complicated. In the short term, probably not, because the United States government is printing money. Spending money is what causes inflation in the first place. You're probably going to see people buy more things. People are going to be spending more money, and we're just going to have more money circulating. So that is going to cause inflation to go up, albeit probably just a little bit or at a negligible amount. And it definitely won't lower inflation, because there's really nothing in the bill that is going to lower inflation in the short term, because you got to remember a lot of the factors that are causing inflation are very much out of the United States government and the Federal Reserve's control. Yes, the Federal Reserve printed a ton of money over the last few years, flooding the entire economy with extra dollars, and that created inflation because people went out and spent this money. They also lowered their interest rates, so it was very easy for people to borrow fake money. All of this credit and all of this loans that really isn't their money anyway, well, now they were borrowing this money to get a mortgage, to get a car, pretty much whatever they wanted. So yeah, that immediately ramped up inflation in our economy, and because of things like the pandemic, we also had supply chain issues. But supply chain issues are not just localized to the United States. They're throughout the entire world. So other countries like China and continents like Europe are also facing supply chain issues. continues. That's not all going to go away because of the Inflation Reduction Act. We have supply chain issues, we have a lot of shortages, and all of that money is already out there. There's nothing you can really do about it. Of course, the Federal Reserve is raising its interest rates, which pulls a lot of demand back. It pulls a lot of those dollars out of circulation, but eventually those dollars are going to come right back out. And of course, we've got the war between Russia and Ukraine, and well, we just have a lot of problems that are not being caused by the federal government and the Federal Reserve. So inflation in the short term probably isn't going anywhere, but in the long term, well, there is a potential. If everything works correctly, then this could actually reduce inflation a lot in the long term. A lot of Americans won't be spending as much money on certain things, but you gotta remember everything is relative. As the price for some things goes down, like energy potentially goes down, well, food prices right now are spiking. They continue to go up because of shortages and supply chain issues, and we don't know when that's going to end. It could be 1 year, it could be 3 years, 5 years, or a decade plus. So as more Americans save money on energy, they'll probably just have to spend more money on things like food and shelter. The housing market is still exploding despite prices coming down a little bit because of the Fed and demand dropping. Well, housing prices are still very much high, so Americans are still spending a lot of money in that area, and this Inflation Reduction Act is not going to fix that. Like I said though, our electricity and our energy and potentially agriculture and our climate, well, things like that could eventually go down in price eventually, but the federal government is giving out tax credits, but they're also looking to tax other things a lot more aggressively. So you might save money in one way by getting an electric vehicle, but then the federal government may turn around and start taxing some other things like stock market investments. We just don't really know. So like I said, the potential is there, and if everything works correctly, meaning that a lot of these projects and a lot of these things that the United States government wants to produce cost exactly $750 billion, then, well, it very much might reduce inflation in the future, but we just don't know. So there's always that potential that it could aid inflation in the future and actually make inflation go up. Again, we just don't know. This bill is going to be rolled out over the next few weeks, and then we'll have a little bit more information. But until then, the jury's still pretty much out. But now I want to hear from you on this issue. What do you think about the Inflation Reduction Act of 2022? Do you think that it's actually going to bring inflation down, whether it's in the short term or the long term? Or do you think that inflation is actually going to be hurt and go up because of this bill? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.